Welcome to the Great Reset Opportunity Report. I'm Chris Blasi. I'm really excited to have a guest today who's very prolific on the internet with videos related to the economy, the financial markets, and has a real expertise in what we would call chronicling the Great Reset. And who I'm talking about is Lynette Zang. Now, Lynette has been active in the financial markets since 1964. She's functioned as a banker, a stockbroker, and has been a student of world currencies. Since 2002, she has been with ITM Trading as the Chief Market Analyst. So let's start off. Lynette, welcome to the show.
Well, thank you very much. I'm really happy to be here, Chris.
We're very excited to share your views with the audience. So as the title of the show obviously states, we are focused on what we see as the Great Reset. Now, several years ago, or especially 5-6 years ago, this was not a term that was commonplace. This is now becoming more commonplace, even into the slightly more mainstream media. And to us, what that means is it's not just a financial crisis or a minor change, because things are always evolving and changing. I mean, nothing is static. But from our perspective, we see something much grander and much more pervasive and across the board than anything that you and I or most people or anyone really has experienced in their lifetime in the United States. So just as a way to make a level set, I'd like to ask you first, do you subscribe to the theory of a Great Reset? Second, what would your definition be of it, or how would you describe it? And lastly, do you think it's something that's down the road or is actually already in progress?
Well, I can answer actually all of those questions because I've personally been talking about the reset really since 2008, because that's when the old system that we were used to died and was then put on life support with all of these grand central bank experiments of QE and negative rates and all of that. So when I'm thinking about a reset, I agree with you. This isn't just a run-of-the-mill recession, but this is a reset, really even into society. You could call it the fourth revolution, frankly. It is definitely a monetary and financial system reset because of all of that unpayable debt in the system that is compounding interest really rapidly and preventing central banks, frankly, from giving themselves at least the old tools that they use by lowering rates to increase demand for more debt. The demand is really not there, so that's like pushing on a string. But the reset would also include our society. And I mean, I'm 64. So when you're talking about being in the market since 1964, on some level, I really did start when I was 10 years old and have been, maybe I didn't realize it all the time, but I've been a student of the economy. And as anybody that's lived that long, just think back to what happened in 1971 when we shifted from a gold standard, even though it was abused, but we're still on the gold standard, to shifting to a debt standard. And what we're coming up with now, and also in employment. I mean, it used to be back then that you worked for a company, you had a defined benefit pension plan, which they developed to attract workers. Now in the gig economy, people are needing 3, 4, 5, 6 different jobs to pay their bills, and they're trying to talk us into, and they're probably going to be successful at it, the sharing economy. So there'll be the owners, and then there'll be everybody else that's leasing everything down to the clothes on your backs if they have their way. So this is a huge reset. It's a whole system reset, and it will require a crisis of great enough magnitude to scare the crap out of everybody so that they will accept what they're going to then cram down our throats.
So I agree with you. And I think, my take is this is not by accident. It's been by design.
Absolutely.
It's to take us to the next step because, you'll hear people trash the Federal Reserve, and they'll say things like they're ignorant or stupid, and they're not, right?
No.
They're not, but what people miss is they have an agenda, and it's not for you and I to be prosperous and free, right? It's always about power and control. And we've unfortunately, through decades, have surrendered, or the majority of people have been willing to surrender for a false belief or false premise of security, or their economic or actual physical security. And, obviously I believe the educational system has been by design to prepare people to have a mindset that they have to behave the way they are. So
right.
It is quite troubling. I agree, because the reason it's a great reset, it's more than just even the collapse of a currency. It's the changing of the whole social fabric. And
right.
It's quite scary. I think another thing that prevents some people from dealing with it is, of course, the most primal thing is fear, right? It's easier to ignore it. And that's what I think many people do. So
unfortunately, though, if you do that, ignorance does not make you immune. It simply leaves you vulnerable.
Absolutely.
And that's what your work is about. That's what my work is about. We don't want anybody to be vulnerable.
No, but so yeah, hopefully, slowly these sorts of videos help to educate people and get them to see things in a different light. So we'll talk about some of the more pedestrian things, because what can happen or what will happen socially is really the more frightening, or actually the more important. But first,
right.
We'll just talk with some of the basics. So debt, right? That is, from the economic perspective. Tell us about why you see debt as really the fundamental, the foundation for this big economic reset.
Well, that's actually pretty simple, because really, whether you're a government, a corporation, or an individual, the laws of economics work the same. The difference between you and a government and a central bank that has a central bank is that in the current fiat system, which means by decree, so it's money that's declared money by a government, they have a printing press, or actually even cheaper than that, they push a button on a computer and they can create as much money as they want. But I think also what's critically important for people to understand, and this is the part that, you talked about the education system. This is what we should start learning when we're in grade school, is what money is and why it actually matters. Because if you don't understand that, then why there's too much debt or all of the other abuses in the system don't really make sense. And
well,
what money is.
Yeah, I just have to say, think about how the irony of it. You have literally kids even coming out of college as economic majors, not understanding how the central banks work, and legal tender and currency and money. I mean, I equate it to someone saying, I'm a surgeon, but I have no idea how the circular system works. But I'm still going to cut into you, right? I mean, it's that illogical.
Well, it is, but if you stop and think about it, if we understood, number one, that money is a tool to value our labor, and the original goal was to always be fairly paid for your labor, so no matter when you wanted to use it down the road or whatever, it held its value, and therefore you were always fairly paid for our labor. Mm-hmm. We've been kind of trained to just think of it just as a tool of barter, and inflation erodes its value over the time. So it is a great tool for governments because, hey, they get to tax you without legislation. That's the inflation tax. And the way that works is who gets to use the money first when it has the most value. Mm-hmm. Actually, it's the corporations around the central bank and the commercial banks like JP Morgan, et cetera. They actually get to use it very first, then the government. And then it trickles through the whole system. By the time you get it, it has a whole lot less value. But keeping that in mind, the moment you get it is when it will have the most value in its lifetime. So if you try to save for retirement and not take risk on it, preserve your principal, even that gets eroded by design over time. And if you really understood this, you'd say, that's crazy. That's not okay with me. So that's why you have college graduates. And I would ask anybody, because it can really be just as simple. If they're working with an insurance agent or a stockbroker or a banker or anything like that, just ask them this question. Can you tell me how money is created and supported in the current system? The answer is really simple, because what are we told? We're told that what backs our currency is the full faith and credit of the government. So if you translate that, as long as you trust them, you have confidence in them, you have that faith, then you will continue to loan them money, extend them credit. The problem is, I did a study, I think it was in 2009, when we were sitting at about $1 trillion worth of deficits, and I believe that the debt levels were something like 13 trillion at that time. Mm-hmm. And I said to myself, well, wait a minute. Most of this deficit was created since the Great Recession, since the last crisis. Why are we servicing 13 trillion in debt? So I dug into, you can get that data online. I don't have any special access, but at the CBO or at the Federal Reserve, you can get all the underlying data. And what I discovered was that 77% of the debt that we were currently servicing, and I sent it to some accountants to make sure that I was thinking about this the right way, but 77% of the debt that we were servicing at that time was compounding interest. Now, what did they do? When they lowered the interest rates to zero, did people or corporations utilize that to, well, they did restructure a lot of that debt at lower interest rates, but their cost to service at 0% meant that they could take on, and which is exactly what they did, a whole lot more debt for the same amount of payment. That's why interest rates can't go up, because you would see too many bankruptcies. They wouldn't be able to cover up what's called zombie corporations that are really don't even make enough money to cover their interest payments, but the banks don't want them to default on their books, so they just let them continue to extend those loans. At some point, they won't be able to do that anymore. So
and that's why they say the Fed's in a trap right now. They can't raise the rates. So
exactly.
Let me ask you another thing. There's two schools of thought, even amongst analysts who see a reset coming or a big market dislocation, and that is those in the inflation camp and the deflation camp. Now, I believe you're in the inflation camp. Some people believe there's a deflationary period first and then a hyperinflation. So I just wanted to get your opinion and where do you stand on that?
Right. Well, I think that deflation and inflation are just flip sides of the same coin. And in deflation, prices go down. So in 2008 or even in December, when the markets were going down, that is deflationary. Mm-hmm. On the other side, there's only one way. So you don't have 1,000 ways. You don't even have 2 ways. There is only one way to fight deflation, and that is with inflation. The assumption is, and frankly, this was a successful experiment of central banks since they started to take control in 1913, is that this was the first time that central banks had attempted to control the rate and speed of the inflation. And frankly, the only difference between inflation and hyperinflation is the speed of that inflation. So we've lost over 97% of the value out of the original dollar's purchasing power, but we've done it over a long period of time. And by the way, even if central banks meet their 2% inflation target, could somebody out there please tell me how that is price stability? If my prices go up 2% a year, well, that's not stable pricing.
Yeah, that's part of the brainwashing, right? First of all, that people think inflation is a totally normal thing and should be encouraged to a certain degree. I mean, again, that's a brainwashing to serve central banks, not for the
Absolutely.
public.
They call it perception management.
Absolutely. So now let's talk about, most people, the majority of their portfolios are going to be in equities, bonds or fixed income, and real estate. A lot of people look at, especially their primary residence. Where do you see these markets? How do you see them affected in the next 5 or 6 years? And sometimes when people talk about having hard assets in an inflationary time, a lot of people believe real estate would be a competitive hard asset with something more like gold or silver. I have certain opinions on real estate as a hard asset in the type of financial events we have coming. But first, I'd like to get your just quick analysis of stocks, bonds, and real estate.
Okay. Well, for one thing, again, with the perception management, we've really been taught that these are the only options. There's no other option but what Wall Street wants to offer you. And frankly, as an ex-stockbroker, in the 80s and the 90s, I actually was part of that transition, which is why I understand it so well. But what we know, look at the unicorns. Come on. The whole premise, their whole game plan is to go in and not make money. And hey, most of them will never make money. And yet, because of all of the funding rounds, the money that corporations and venture capitalists have put into them, it's worth $79 billion. Mm-hmm. That is severely overvalued. And a severe overvalued circumstance, even if it's not them, the rest of the stocks on the stock market with high price to earnings ratio and all sorts of financial engineering, stock buybacks, these kinds of things that make it look like corporations are earning more money. And let's face it too, the inflation rate is actually gauged by the cost of the goods and the services that these companies produce. So for governments, it was that invisible taxation. For corporations, it was the ability to pay you less, even though nominally you were getting more, but the profits, it was all about profitability for the corporations. So the stock market is extremely overvalued. You buy into it now, you're on hopium, hoping somebody's willing to pay more. And they will until they won't. And that's where liquidity and different things come in. So I don't own a stock. At this juncture, I wouldn't own a stock, but I intend to during the reset when all that fiat money inflation has been burned out. As far as debt is concerned, you can't fix a too much debt problem with more debt. If you did that on a personal level, you're ultimately living underneath the bridge. This debt is not payable, and you are not getting paid for the risk that you are taking, even in a high risk level, a junk bond. And the grading services that did such a great job, I'm so facetious about that, during the crisis by bending the rules so that things looked like they were AAA rated when they were absolutely garbage. They're doing it again. They're doing it for corporations and they're doing it for individuals, and they're actually even admitting it. So bond markets at these levels plus the inverted yield curve, you are not even marginally getting paid for the risk that you're taking in debt instruments. And I would not touch that with a 10-foot pole, because you're going to have your head handed to you. And negative rates where somehow it makes logical sense, or somehow it makes sense. I know you can't pay me back, but I'm going to pay you to borrow the money that took me an awful lot of work and effort to earn. That doesn't make sense. So the real risk in a lot of this are the debt, the credit markets. And that's the problem, because the more of that the central banks are encouraging you to buy, studies have shown that over time, all of the QE and the interest rates that they're doing and all these funny things are losing their impact. It's a diminishing impact, which when you're looking at a 5 to 6 year time horizon, look, it's beyond my control. So timing is the biggest challenge of any technician, but I don't see it going on much longer, particularly when you have the whole LIBOR issue, which is about that interbank lending to keep things going and all that. I mean, all of those contracts that were written against LIBOR that mature after 2021 have to be restructured or reset between now and then. And it's a big experiment. And all of those derivative contracts that are tied to them, well, nobody really knows what the impact's going to be because none of this has ever been done before. So you're counting on these guys that have made plenty of mistakes not to make any more. Yeah, that's not like it.
That is an irony, how people continue to hang on the edge of their seats, listening to the prognostications from people who have either been wrong because they don't understand the markets or understand the markets and are purposely leading you down the wrong path. That's another conversation, I guess, for a psychologist. But, in times that we're in, really, because it's already underway and where we're going, what's going to be difficult for people to really accept and get their head around is, you will get, I'm sure your firm, ITM gets these sorts of calls, your specialists, whoever works with the clients, people are like, okay, I'm understanding, I'm learning now, but what do I go into? And it's hard for them to accept there aren't going to be as many options to go into as a preservation of wealth. Everyone wants to always use the old playbook, right? They still don't understand that, well, if this playbook worked during the manipulated times and all the machinations of the banks and the central banks and the governments, if those aren't going to work anymore, then you look on the flip side, there's a very small pool of assets that will really work. In our opinion, history tells us it's a very small set of options, but I'm going to let you share with your perspective on truly what is maligned by the mainstream financial media, but is actually being rapidly accumulated for a number of years now by central banks, which I guess people don't remember the old saying, do what they do, not what they say, because that would be very applicable, right? Very applicable right now. And the point is, if you look at a central bank, whether it's China or Russia, and you think they don't understand the markets, well, they actually have a seat at the big table. The average person doesn't, so they probably have a much better insight. So I would keep my eye on what they're doing. But share with us what you think people should be positioning themselves with going forward.
Well, I have a very strong belief, having been in these markets on some levels most of my life, that you always want to hold the lion's share of your wealth in an undervalued asset that's in a long-term positive trend, and the least amount of your wealth in an overvalued instrument that's in a long-term negative trend. And I don't think anybody would disagree with that. The big challenge for most people is that they don't know how to identify those. So they'll look at the stock market or the bond market, and you talked about the real estate market and any other market or any other Wall Street products. And what people need to understand is that all of those are created from and can only be converted back into the fiat money, which by design loses value over time. And there's less than 4 cents left in it. Whereas gold, and again, it's the flip side of the coin. You've got good money, which is gold, because it's all intrinsic value in that there is global demand from every single area of the economy, whether it's manufacturing, it's monetary, it's jewelry, it's art, it's even food, it's medicine. Every single area, and this is true with silver too. I definitely like the gold and silver as the primary and secondary monetary money, but those are actually real and they have intrinsic value because they are rare and there's broad buyer base. When you're looking at this fiat garbage, it has value in one place and only because people agree that it has value. gold and silver physical has real value. And so when they're talking about dry powder, well, that's not cash because that's losing value as you sit on it. It may look like your principal is there, but it buys you less and less and less over time. So at the moment, with all of those other markets intentionally reflated and overvalued, the only undervalued markets that I see, and I'll tell you how you get this too, is the physical gold and silver market. And a rising gold price is for a central banker an indication of a failing fiat currency. And if you realized your money was losing value and about to go away, plus all that other crap that they've built from that goes to zero or somewhere near that, then you would make different choices. For me, without a doubt, it's about food, water, energy, security, barterability, wealth preservation, which is what I use gold and silver for, those two things, community, and shelter. That's what we all need, regardless of what's happening in the markets. We all got to have a place to live, food to eat, water to drink, the ability to turn on a light, keep a refrigerator running. And community is what's really becoming more and more and more important, because we need to come together, which is really what your work and my work is really all about. This is a community here, and we're trying to help people understand. So gold right now, I haven't done the calculation recently, but an easy way to get it is by how's money created. We got to know how much money is out there. And a lot of the countries have stopped publishing that, including the US in 2006. They stopped publishing the M3 supply, the money supply. So you can't really use that with any accuracy, but since money is created from debt, then debt is a great proxy for how much money has been created. Now, of course, derivatives even take that to another level, but we'll put that on the back burner for just a second. And then with debt, there's an unlimited amount until they stop. Nobody will take it anymore. With gold, there is a finite amount, and it's indestructible. So just to get somewhere in the vicinity, you want to take all the debt and divide it by all the gold that exists. And, that's going to get you somewhat close. And I think that's probably somewhere in the vicinity, conservatively right now, of $10,000 an ounce or more, with spot trading at, 1,300-ish. That's a bargain.
Absolutely. And now how about this aspect? As you said, gold is finite. So when it becomes abundantly obvious to the masses and gold is moving up on that trajectory up to some of the targets you just mentioned and some other, very knowledgeable analysts who have similar targets, at what point does the reality is the average person, who unfortunately is more the low person on the totem pole, right, when it comes to the hierarchy in the world, when does their ability to acquire gold, silver, precious metals in physical form, not a derivative, when does that end and when does that get cut off?
Wow, that's a great question, and I'm not really sure exactly when that's going to happen.
But do you believe at some point it will?
100% it will.
Yeah.
I mean, they're using perception management to get you to not want to buy it, right? Oh, gold is going down. Well, it's easy to control that. The CME, it's a $1.10 for a central bank to control 500 ounces of gold and 5,000 ounces of silver, and it's a $1.50 for JP Morgan or Wells Fargo to control that much. So it's cheap and easy. And if you're a central bank, you don't even have to earn the money that it's going to cost you to do that. But you made such a good point, and it is a point that I try and make all the time. You don't need to understand all of these different nuances in order to make smart choices. Just look at what the smartest guys in the room on any given topic, what are they doing for themselves? And central banks, as we know, have been buying gold hand over fist, and up 74 or 77% year over year in the most current data that I've seen from, gold.org. Why? And a lot more central banks participating in accumulating gold. And they're doing it because they know the rest of their reserves are going to be worthless.
Absolutely.
And they want to stay in power.
And to talk about managing people's perceptions that even something positive, that they can convince people through timing and a drumbeat of opinions, is if you actually look at the chart for gold from when this secular bull market began in 2002.
Yep.
People are saying, and they keep hearkening back to 2011 when it had that little brief run up to 1900, now down to 13, forgetting it started in the high twos, 295, right? And I know the first trade, got involved in this market in 2002, and the first trade I did was at 318 an ounce. Now, so it took that.
I got it at 242.
Yeah. And
that was where I was.
Went to ITM the same year, so it's an interesting timing that we both have. But they talk about a classic secular bull market from a chart perspective. Even with the manipulation, you had that run from 2002 to 2012, a perfect 50% retracement, and now it's grinding higher. And at some point, this third leg should kick into that hyperbolic mode, which obviously, to me, in my opinion, just seems to dovetail very nicely into what we're talking about, this reset getting more and more traction and basically at some point becoming uncontrollable. And simultaneously, you see these central banks accumulating gold. I don't believe these are all coincidences. I believe it's all supporting the premise and the thesis that you're sharing, and that most of the guests on this show do share. So, this was, really, a great reinforcer, and I hope a lot of our folks, do some investigation and do more analysis. And, you offered some great resources and things to even look up about what you've shared with them. So one last thing, would you like to make a final, some comments for the listeners about what they should do?
Sure. Well, absolutely, because I think that you need to look at where you're the most vulnerable. And again, during these transitions, food becomes the biggest issue for most people. That's why I actually started an urban farm in 2010. And today, if I had to live off, I probably generate 85 to 90% of my food from my property, but I brought in huge bags to share with everybody. You want to make sure.
Can you just share exactly what that is? A lot of people may not be aware of what that means, urban farming. So can you just, yeah.
Well, yeah, I live in the middle of the city. I got rid of my lawns, most of my lawns, and I've planted food. Mm-hmm. So I've planted like nut trees. I have almonds, pistachios, and pecans, and then as well as pomegranates. I mean, food, mm-hmm. vegetables, chard, things that I can eat. I have chickens and ducks and quails, so I get eggs. I have tilapia pond, so I have fish. And I've planted the whole property out. It's only a half an acre. It's not, people go, my God, you must have 1 million. No, I only have, a half an acre. But there's food and or flowers, and a lot are edible flowers too. I'm producing food on every part of my property with the goal of sharing. And I put in around the property, because I'm on a corner, what I call food hedges. So I've got pomegranate hedges, cherry hedges, citrus hedges. So if somebody's walking by, and my neighbors do, they'll come in and they'll pick their basil or a zucchini or an orange or what have you. But I did it specifically because when people are hungry and hopeless, they frankly make choices they would not otherwise make, and food is the biggest issue. So an urban farm is simply a farm that I've put together in the middle of the city, and on which I can be 100% food independent. I've solar. So if I'm telling you food, water, I have 5 ponds on my little half acre. I have 5 ponds now, but last year I converted my swimming pool into an aquaponic swimming pond, which means no chemicals. All of those ponds, I'm in Arizona, which is drought. I guess we're not in drought at the moment, but that's an issue. So they're also rain catchments, so I can accumulate my water. And because there's no chemicals in it, I'd still run it through a filter. But if we needed to drink from it, or if I needed to use that to keep my other plants alive, that's in place. So yeah, I do what I say. If I'm going to tell you that I suggest you do something, it's because I'm already doing it, or I'm not going to tell you. It goes back to do what I say and not what I do, which I grew up hearing my daddy say that all the time. And he was a great man, but I'd always go, Daddy, that just doesn't make sense to me. So it didn't make sense then. It doesn't now. A lot of my work is around showing you, forget what they're saying, what are they doing? Is this true? And the other thing that I'd like to add in here is on our YouTube channel, where I do all of my research pieces, I give you all the links. So you don't even have to really hunt around. I mean, you're welcome to, obviously. But if you want to make it easy, there you go. There are the links. Don't take my word for anything. But don't take anybody else's word for anything either. Do your own due diligence. And then lastly, I've studied currencies since 1987 as a stockbroker, and I am an artist. And what I have the ability to see is patterns and how patterns fit together. So a lot of what I'm trying to show people is how to recognize those patterns. So again, you don't need to know all the minutia, but if you can recognize the patterns, then you're going to have a greater understanding of where we are inside of these circumstances. And what I actually did was develop a strategy based upon those patterns that always repeat, historically repeat, because I can't guarantee what's going to happen tomorrow. But I kind of feel like if something's happened 100% of the time before and we're doing the same thing, what is the most likely outcome? And there's a reason. There's some Jim Rickards, who I have a lot of admiration for, talks about the dynastic wealth stool. Well, there's a reason why that wealth has stayed in families at least 300 years. It's all tangible. It's real estate, truly rare collectibles, not because the Franklin Mint says it is, but truly rare collectibles, and gold. And I think that gold is the single most important piece, though you can do it in all 3 areas, but gold money is the most important piece because it enables you to keep these other 2 and or accumulate those other 2.
And I just have to expand on that a little bit, because that's 100% right. And what people, who just say, well, the stock market is forever, forget that in Roman times and Greek times and, 1,000 years ago, there were companies. So, I mean, what's a stock? It's just, a supposedly ownership share of a company. Now, there are no companies from the era of Rome and Greece that are around anymore. But gold is still valuable. Art is, and land, not companies. Companies have a short lifespan to them. And to think that your stock is going to be, you're going to just keep passing this on generation to generation is not really understanding history. Now, for the average person, the reality is true art is really out of their reach. It's a very,
at the moment.
Yeah, it's a truly super affluent, and it's not very liquid. And real estate is a great long-term hold, but there's times when it's not going to be liquid and you may get pushed off it. So therefore, when you have the big dynastic wealth like Jim talks about, yes, those 3 are ideal. I think for most people, it really comes down to the precious metals, maybe a little real estate, the art. I don't know so much if that's.
I have to tell you though, what I really see is because we're talking about a reset and we're talking about a crisis. And a lot of times that's just where people go, oh, doom and gloom and but you have to understand that in every crisis, there's opportunity.
Absolutely.
So where you feel like at the moment that a Rembrandt might be out of the question for the normal person, if you've accumulated enough gold and they have too much leverage, because leverage is what's going to kill them, then you may actually have that opportunity. And that's built into the strategy too.
I agree. So this is the point where the gold and silver should probably serve for those who hold it, who will not only, because don't forget, wealth is, if everyone around you gets pretty much wiped out and you're the only one with any assets left over and liquidity, yes, then a lot of those traditional things become more affordable. I'm just saying at this stage of the transition, the Rembrandt isn't, right? Or the Picasso isn't.
And that too is overvalued right now in these overinflated markets. People think there's no inflation from all the QE. Sure, it went into the markets, including that kind of art. But through the reset, that inflation gets burned off.
Absolutely. And there's a time when the precious metals holders will then be able to go into the real estate market, which truly is a historic wealth builder and generator, but not in these overinflated, markets, especially a lot of these rental units, right? What happens when people's jobs are wiped out? You're not going to get paid, right? So what these apartment complexes or whatever sell for, or commercial property sell for, are going to have to come crashing down, and that's when you want to buy. So really, position yourself with real money now, waiting for the reset to put the prices at their proper level, and then you would be the one who's liquid and has wealth to reinvest and expand into other areas. So
right.
I concur.
I mean, that's how J.P. Morgan did it. That's how the Rockefellers did it. That's how the Kennedys did it. That is how the wealthy accumulated, by buying the undervalued asset today, gold and silver, because that's what benefits the central banks at the moment. And that's why it's so important to have the ability to recognize the true value of any asset or instrument. And then when all that fiat money inflation is burned out, you've got the only real money. You pick them up for nothing. And that's how you make sure, for me, I'm 64. I'm going to be around maybe another 30, maybe 40 years, because I think I'm going to make it to 100. Mm-hmm. But this is not really so much for me. It's not okay with me what they want my children and my grandchildren and my great-grandchildren, the kind of life that they have, where they are just renting everything. And if you are renting everything, guess what choices you have?
None. And they used to call it'll be the company store on steroids. As bad as it was back in the old mining towns in the early 1900s, late 1800s, right? That horrendous company store situation. It's with technology and central banking and communications, it is that far worse than it ever was in a Pennsylvania mining town, but people just don't understand that yet.
But imagine if all wealth is held digitally. Yes. And the title to all wealth is held digitally, so that any equity that you have is now easier to spend, but the government can do lifetime taxation, which is what they're talking about. Mm-hmm. And the central banks, there are no limits to how low they can push interest rates. And hey, they can control when those payments come out. They can control how much they are. I mean, you give up all control for a little bit of convenience.
Well, and their argument, because they'll obviously never admit they're wrong and their policies are wrong or not right, will always be, our policies work, we just don't have enough power yet. We just need more control. It's this one little niche part of the market that we're not completely controlling that's preventing us from bringing this utopia. And of course, unfortunately, most people will buy into that.
But you know what's really interesting? Have you seen the Bank for International Settlements money flower?
A number of years ago, but
Right. Well, in that money flower, they show you how everything is under their control, except for it's actually a pretty big area of monetary metals, so gold and silver. That is the only thing that is universal, that is peer-to-peer, and that is outside of the central bank control. That's what I want. I want control over my wealth, because I'm going to care more about what happens to me for my children, for my grandchildren. I'm systemically important. For the government, I am not important at all. I'm just the right size to fail.
Mm-hmm.
You know, you have to become your own central banker and make sure that if you're going to hold wealth in those systems, that you are properly diversified outside of there, so you don't just lose all of it. You can recoup it, which is another function of gold being so cheap right now.
Mm-hmm.
It enables you to recoup any losses, any taxes, any fees, any fines, any of that stuff, because it's so undervalued.
Lynette, this was a great conversation, and we actually even touched on some areas that are a whole interview on their own. So I'm not going to put you on the spot, but I'm just going to say I hope we can get you on again in the not too distant future, because I think things are unfolding rapidly now. It's picking up speed, and I think you coming in and joining and chronicling what's going on is a real service to people. So I want to thank you again for coming on, and hopefully we'll be talking like this and chatting again soon.
I'm sure we will, Chris. It's been a lot of fun. You're a great interviewer.
Well, thank you very much. Take care now.
Bye-bye.